Okay, welcome to the weekly equities review. So let's just before we start, it's not financial advice, guys, just what we see and sharing what we see and what we're doing. So take with a pinch of salt, make your own analysis and come to your own conclusions and be accountable for your own trades. Okay. So the Dixie did bounce up last week, higher than we anticipated. We had our bounce target somewhere there. It went slightly higher this week. Would expect it to continue going down after again another bounce. Okay, I would expect us to test the 9-day moving average on the weekly chart, which is around 97,597. So we got an alert there, and after that, we'd expect us to come down and form our last level drop to the downside. So, so that's what we're expecting on the Dixie. There's really not the reason why for the bounce. Okay, it's on 4 hours. So on the 4 hour chart, with these sort of big fat selling candles you get, these ones here, these ones, you see them, they don't linger. Excuse me, they don't linger for too long. At some point they go back for the liquidity. So this one is still pending recovery, and it will be recovered once we finish the legs to the downside. But these ones here, you can see we've already recovered that. We've already recovered this, and you would expect that this will also be recovered very quickly before you go to the last leg to the downside. So, I'd expect us to recover it before we continue the journey to the downside. So that's what we're seeing on the dollar. Um, So that's what we've seen on the dollar, and we expect the bounce up to come, and then after that, you have your leg to the downside. This candle was not exceeded, so it's 9702. This is 97018. Okay, that's interesting actually. So the candles are such that if you zoom, unless you zoom in, you don't see the divergence on it. Okay, so there's a divergence here. So definitely, yeah, this will be recovered. We will recover it. And we've just broken the base really of this support zone, support zone, support zone, support zone. It's been broken, and a retest, slide up, continue the journey to the downside. So that divergence actually supports going up first before coming down. So that's the Dixie. And let's move on to the next thing that we want to talk about, which is the Nasdaq. So the Nasdaq um, on the weekly chart, uh, we've got very good rejection of lower price here. The bears could not push the price below the closing of this candle, so it's still bullish. We've kind of held the 9-day moving average, so you'd expect more upside on this into next week. It's possible you do a small retrace backwards first to test the wick of this candle. So I would not be surprised if we end up testing this first somewhere here and then continue the journey to the upside. So that's the Nasdaq. I'm not even going to go to lower time frame. Let's move on to the SPX, which is also very similar. So the XPX has also had a very similar kind of rejection candle from the bottom. The bears could not push price to close below the close of this candle. It's still looking bullish to me. The volume is good. So, you'd expect that maybe we test the wick to somewhere there and then continue the journey to the upside. So that's the Nasdaq as well. And then we go on to onto gold. Gold. Let's have a look at gold. So gold on the weekly chart. No, we don't want to use this one. I want volume. I want the one with volume. Here we go. So we want gold is looking very good. So strong close on the weekly chart. It's always, you have to always think contrarian. Okay. So whenever there's a strong close, expect a pullback before the continuation. Okay. So you would expect that 50% of this probably will be given back, right? So if we do a quick here to there type of scenario, then you can expect that, okay, 3517, let's put it on there. So you could expect a pullback to somewhere here, and then it continues the journey to the upside, and then maybe you form something like this here, which closes above the close of this candle before we continue the journey to the downside. So I expect a pullback into next week before the continuation to the upside on gold. I'm expecting that gold will come and hit this trend line. So this trend line here, which is a trend line that goes all the way back from here. Where is it? It goes all the way back from the previous top that we formed here in August 2011 to this top here. It cuts through the top formed in April 21, and I think it will hit that and try to poke above it. So if you look at, I've drawn some boxes here already. So I'd expect that we will poke through it into this box slightly, then have a liquidity take. We'll take all the liquidity on this candle properly. And there's an interest candle that I've got on the, is it the daily chart? I have an interest candle on the daily chart, or is it 4 hours? Yeah, 4 hours. So there's an interest candle here, which I expect will be exceeded. This candle here is our interest candle, and it will be exceeded to the downside first before we continue properly. There's so much liquidity sitting all around here to this point here. And these market makers don't like leaving liquidity sitting. So you can expect that once we finish that, this pullback here and we've gone up again, you should be expecting that we'll be coming back all the way below here and taking all the liquidity, even all the way up to maybe the 200 EMA or SMA, which is sitting somewhere here. So gold, in summary, small pullback, take some of the liquidity around this zone here, and then continue the journey, push up one more time, and then we continue the leg to the downside. I've only got a divergence between here and here, and normally I want to see another one to the upside. So I expect this line to be broken slightly, and then after that you have a proper pull down. So that's gold. I will be laying some more shorts here when we get there. When we do the pullback, I'll take a long hedge on my short and then add more positions at the top. So that's how I'm trading gold. And I want to move on to the next pair, which is the GBP USD. So GBP USD on the weekly chart. Let's go to the weekly. We had a rejection of lower price from the 20 EMA, which is great. And I would expect that with the dollar going to go down, this will go up. So you can expect a pullback to maybe somewhere here. And we can put our golden line there. Maybe a pullback to somewhere here before we continue the journey to the upside. I think it's going to go all the way to about 140, 140, 142 area up here, which will be like the tops, the previous tops. Probably test the previous tops. That'll be a great place to take some shorts because from then onwards, you'll be coming down quite a lot. Ultimately, that down will bring us all the way down to here when the dollar starts going up. So that will be a juicy trade, which I will be taking when we get there. And then the next one is oil. So oil will be, it's a downer this week. So last week we were expecting it to go up slightly. It went up slightly higher. It didn't get to us. I was expecting it to come to somewhere here. Came short 69, didn't get to the 72. But this week we'd expect it to continue its leg to the downside. I think initial target will be 63. And then it could go all the way to the bottoms here, which is 58. I think dollar will probably oil will be coming back to test this trend line and somewhere around the 40s, 48, 50 zone. I think is where you would expect it to fall to. There's some good liquidity sitting down here, which I think will be taking. So you can expect it to poke through this, then probably have a good move to the downside. Once you clear the bases here, once you do clear the base here of the move, so you see we cleared the base. These are all support base. Once you break it and you kind of retest it and close below it, you want to go lower. So dollar is a downer for me into next week, and I think that is all we've got in terms of the equities. So I wish you all the best for next week and safe trade, and we'll catch up.